Welcome everybody to another Legion Live. It's our weekly, I won't say random because we do plan it, but the topics could be varied. So our weekly variable content series live show where we try to bring you guys something interesting, entertaining, and applicable to your e-commerce journey, frequently based on your recommendations, which is pretty cool. So we have a special guest today, and I'd like for her to introduce herself in just a second. But before that, I want to mention a couple contests. In this episode, we're actually giving stuff away. We'll make sure I'm staring at the comment section. So, we're going to be giving stuff away, so be ready for that. But I guess before that, Cyndi, if you would just briefly introduce yourself and tell everybody kind of who you are, so that you have a little backstory to the expertise you're bringing us.
Okay, thanks, Tim. And Norm, glad to be here with you and your audience today. My name is Cyndi Thomason. I'm the founder of an e-commerce accounting firm called Bookskeep. We've been around since 2014. And our focus with our clients is not only providing great bookkeeping, but also helping them become profitable. And I'm also the author of a book called Profit First for E-commerce Sellers to help our clients really understand not only the profitability side of things, but also how the cash has to work in their business to ensure they've got money to keep going and to grow. So that's a little bit about us.
Cool. So Cyndi's not here to pitch her accounting firm. You guys know that we hate pitches, but because she is an accountant, she sees a lot of things. She has some really good insight, some really good information, right? She kind of gets to see under the hood, so to speak. So before we get into her topic today and the discussion, which is going to be the 3 most common mistakes that people make with their numbers, let's start off with our first giveaway. Norm, do you want to tell people what we have going on over at the Private Label Legion Facebook group?
Yes. So as you know, we're always trying to build our community. And we thought, what better way to do this than do a giveaway? We're going to give 1 month of the Centurion League. You just have to go over to our Facebook group. It's open until Friday, and tell us what community means to you. And just enter that under the post, and you will be entered for the draw.
So this is like one of those essay question entrances, right? And it'll be funny trying to decide who judges that. But for those of you that aren't familiar with the Centurion League coaching program, it's a group mastermind, really, really cool stuff. You can find out more at thecenturionleague.com. or go over to the Private Label Legion Facebook group and see that post. But give us a response to that Facebook post and figure out how you can potentially win a membership, which is about $200 a month is the value on that. So we have some more prizes we're going to give away in this Legion Live. If you guys would post where you're coming from in the comment section, I'd love to see where you guys are watching from. Since we do want to give you as much value as possible, I want to go ahead and get to some of these 3 most common mistakes people make. And between number 1 and 2, we'll talk about the next giveaway, which is something Cyndi's doing. She's giving away 5 free copies of her book, Profits First for E-commerce Sellers. But Cyndi, if you would, let's go ahead and tackle point number 1 on your list of the 3 most common mistakes people make with their numbers.
Okay, the first one that I see is kind of a combination mistake. I'm trying to get 2 in here instead of just 1. And it's not really understanding how to calculate your gross margin. And then there's a corollary to that and how to calculate your contribution margin. So let me tell you what those things are. So first of all, gross.
Wait a second, Norm, did she say contribution margin?
Yes.
I don't know that I've ever heard that term before, and that frankly terrifies me.
Well, we're gonna learn something today. The way I use those terms is gross profit, profit margin, gross profit margin is probably something most people are familiar with, but I still see a lot of confusion around it. I see a lot of people not really understanding that if you don't hit that an adequate level of gross profit margin, you're not going to have funds to really operate your business going forward. So many times when we do people's books, one of the things we learn is their gross margin is somewhere 10% or below, or can be even negative. And I know that's hard to believe, but it is stuff that we see. So we want people to really understand what gross margin is. So simply you take your revenue that you get from your sales, you subtract out of it your cost of goods sold. And that can be your product. It can be, that whether you buy it wholesale, maybe you had a manufacturer build it for you. Whatever your product cost is, you need to take that out, and you need to back out any kind of assembly cost that you may have, pack and ship, or warehousing of that product, and shipping. Those things are all part of what needs to be calculated at that gross margin level. Now, it's really important, and I don't want to get into a whole accounting lesson, but it's really important to match up your revenue for what you've sold. So say you sell, 100 units at $1,000, you want to match up your cost of goods sold and what it cost you to actually create that product for that same time period and the same number of units that you sold. And when you do that, you can get an adequate picture of gross margin. So people are doing gross margin calculations, but they're not always doing them right. And so they look at it and they think it's meaningless. The point is you need to get to where it's meaningful. So that's the first piece, is gross margin. The corollary I want to add on to that, contribution margin, is when you also factor in your cost of sales and cost of advertising. So things like your PPC ad cost need to be taken out so that you can see. And the contribution part of this is what you're contributing to the operating of your business. So you've got your gross profit margin, then back out your cost of advertising, and the rest of it is the contribution to running your business. Does that make sense?
I see a lot of people talk about their revenue and your top line revenue. Oh, I did $1 million in sales this month or this year, which really means nothing. Like, first of all, you've got to break it down to your gross margin, and gross margin means nothing. I mean, it's something you can work off of, but at the end of the day, you're looking at that net profit, right? So if somebody's making $1 million a month net profit, you got my attention.
Right.
And by entering that contribution margin and adding the expenses, that's going to help you clarify your net profit, correct?
Well, let's be clear about what net profit is versus gross profit. So I know a lot of my clients are really marketing oriented. And so they think about things in terms of a funnel. So let's think about the numbers in terms of a funnel. So you got your revenues coming in, and then that narrows down to the dollars that are going out to purchase your product, and ship it, prep it, whatever. Those dollars are going out. Then you have a smaller amount there. That's what we call our gross profit. And then dollars go out to fund our advertising. Then we get to a contribution margin. And then we have the operating expenses that go out. And the true bottom line is your net profit. And that is ultimately where you've got to pay attention. What I see happening, though, is you can't save your way in operating expenses to a successful business. I mean, we can go in and help you cut out the expenses that aren't needed, but that's not going to drive growth in your business. So you need to really be paying attention to that gross profit number, because if you're not making an adequate level of gross profit, you're just throwing cash into buying more products that may not be giving you the return that you need. And so where I like for people to focus is let's get that gross margin figured out and really operating well, because that's going to be the thing that will throw cash into your business that will allow you to grow, which is what everybody wants to do. But if you're operating at a too slim of a gross margin level, then you're tying up your cash for things that are not going to generate the growth you're looking for in your business.
Perfect. Let's see. Norm's still out of focus.
I don't know.
I have to do that all the time. I have to reset my camera and see if it works.
There. Nope. I have no idea why I'm out of focus.
Well, Norm, while you're fixing that, thank you, Cyndi, for number one of the three items we're going to cover. Let's talk quickly about a giveaway. Cyndi has written a really great book called Profit First for e-commerce sellers. I thought I might have a copy here.
I got one.
She's got a copy there. Yeah, there you go. I've got a copy sitting on my desk right now, but I didn't have one here at my home office. And she's going to give away 5 copies of those. So for those of you that are listening right now, here's what you have to do to enter the contest. In the comment section in whatever live video you're watching right now, you have to comment with the most embarrassing way that you've lost money in your business. All right, the most embarrassing way. The most embarrassing way for me is I once hired a virtual assistant and put her on PayPal auto pay and then forgot about her for about 4 months. And I was looking at my PayPal. I'm like, what is this $200 a month going? It wasn't a full-time VA, but what is this $200 a month? And I forgot that I had hired a VA who ghosted me and I was still paying her. Pretty stinking silly. But comment your most embarrassing way you've lost money. If you are watching this on YouTube, sorry you missed out. We're doing this on Facebook Live right now, but we will give away these 5 copies of the books this Friday. So even if you're watching the replay right now, go ahead and comment, because on Friday morning we'll go through and look at all the comments. Let's see if Norm's back in focus. Hey, Norm's beautiful face.
I have no idea what happened there.
Technology.
No idea.
All right, we got to move fast. So, Cyndi, the number 2 biggest or most common mistake that you see people make regarding their numbers?
I get this question all the time. I made all this money last year. Where is it? It's the confusion between that net profit bottom line number that you see on your financial statements and the balance you have in your bank account. People think that because they made money on paper, is the way we describe it, that they also are accumulating money in their bank account. The reasons why that doesn't work is because there are things that you spend money on that hit your balance sheet and not your profit and loss. And I'll give you a quick rundown of those. One is owner draw. If you're not taking a salary, or maybe you're taking a combination of salary and draws out of your business, proper bookkeeping has owner draws coming off of your balance sheet. It comes off of the equity section of the balance sheet. If you're paying for interest on loans, the interest will hit your P&L, but the principal itself hits the balance sheet. So you can see if you've got a lot of loans going on, when you start paying back principal, that's not hitting your profit and loss statement. And then finally is inventory. Inventory is where you trade your cash, which is an asset, for another type of asset, inventory. And those things happen on the balance sheet. And until you actually sell your product and you book it as a cost of goods sold on your profit and loss, you are not going to see all that cash that goes out the door to make down payments and final payments for inventory that you may not even have possession of yet. And so those dollars don't hit the P&L. And for that reason, your bank account is being hit with that activity, but it does not match up what's in your profit and loss.
What do you think, Norm? You agree? Disagree?
No, 100%, of course. But, another area that I see, I would probably say this is the 4th, mistake that people do, is they grab onto all these shiny objects. They're all subscriptions. They're $20, they're $19, they're $75. Anyways, I just went through this and reviewed everything just recently. I use something called, Track Your Subs. And I was shocked to see how many subs that I forgot about. And I got a list here because I'm working on it. I was just working on it. There was about 8 recurring payments that I had no idea that I was paying. And so I had to get rid of them. But, and I think I'm, I think I'm pretty on top of my expenses, but these are a few that just snuck through.
Yeah, those free trials that you get,
oh my gosh,
that then have to have a credit card, and then you've tried it and it just doesn't work. And we recommend that people go through every 3 months and look at the activity that are hitting their cards and their bank accounts. And when we first start working with clients, we typically can find somewhere in the neighborhood of $1,500 to $1,800 of that kind of activity that we can just take off the books.
Yeah,
it's a very common thing.
Man, I'm looking at some comments here. Some of this stuff is tough, but I've been there. Bad product research. This is ways that people have lost money. Facebook user, we can't see who it is through here, but we'll find it in the groups or the post. It says, I was too embarrassed to ask for a refund of my deposit when the product failed inspections twice and I decided not to proceed. That's tough. That's tough. And
Yeah.
I actually empathize with that. That's especially just getting started. It's hard to figure out what to do in that situation.
Sure.
So for those of you watching right now, embarrassing way you've lost money in your business in the past, it's the same general. And then the best 5 responses will get a free copy of Cyndi's book, Profit First for Ecom, for e-commerce. Coupon stacking. There you go. All right. Cyndi, number 3, hit us with the number 3 most common mistake that people make regarding their numbers.
This one is something that I've really started to understand a lot more recently, and it's the relationship between your inventory that you have on hand, or that your sell-through rate, what's going on with your inventory, and how that needs to be coupled with the planning that you're doing with your ad spend. I've worked with several clients recently, and they've had stock out issues, and their ad costs have not gone down. And I'm like, why? If you don't have the product to send, to send to your clients, why are there still advertising dollars at this level? And you're driving all of this activity for a product you can't even supply, and that's going to be out for quite some time.
Now, let me ask real quick, sorry to interrupt, but where are you seeing that? Because, on Amazon, if your product runs out of stock, the ads should stop. Are you saying that this is like people running Facebook ads for a Shopify listed product?
That kind of thing. And Google ads as well. Just where you're working on multi-channels in addition to Amazon, continuing to pay for advertising and not connecting not correlating the inventory levels that you have or that you anticipate with the advertising strategy that you have. I think those things need to be connected.
Norm? I feel like I'm always going to just revert to you, Norm, the old wise one, to decide if you like this or not.
Yeah, I mean, when you're talking about cash flow, or when you're talking about inventory, they've got a whole other side to it as well. Not only the expense side, but making smaller shipments possibly. Mm-hmm. Not putting everything into, well, it's tougher to do right now, but to put everything into Amazon, because it's going to cost you a lot more. Or if you take 1 shipment or 2 shipments from China and you fill your 3PL, you're not turning over your inventory, which is going to cause a problem with cash flow. So cash flow is a big, it's everything's about cash flow.
Right. Exactly. And if you're not connecting the advertising spend to, that's another cash outlay that you have that is not being used optimally based on what product levels you have and expect to have, et cetera. It should just all be, it's that more holistic thinking about it. You need all of those things to come back and realize the impact that it has to cash.
Amen. What do you think, Norm? Do you think this is one of the driest subjects that we've talked about in a while?
I love talking about this.
Yeah, I hate it because I feel like these topics are really hard for me because it holds me accountable, and I'm really, really bad about being, accountable. Like what you're talking about, looking at your recurring stuff. I've got a subscription to Click Label Print, Click Label Ship. It's a $15 tool that you used to use to print off FN SKUs through a plugin from Amazon Seller Central. I think I have not used that product in 2.5 years.
Yeah.
And every month I see it on my credit card statement. I'm like, oh, I need to go and cancel that. But it's not priority because it's only $15 a month. Mm-hmm. And it's still on there after 2 years. So, yeah, do as I say, not as I do. One of those deals. Anything to add, Norm?
Well, I think you just have to. I think you just have to take a look at everything. Everything we talked about today, from your gross margin down to your net margin, or to your net profit, you have to take a look at. And we've talked about this before, Tim. If you're not making enough on the top, like on your gross margin, how can you ever afford it? There's so many little pieces to the puzzle that you think you're actually your cost of goods. You want to go back and even examine that. A lot of people don't even calculate their cost of goods properly, and they miss out on the shipping, or they miss out on,
sure.
like all sorts of little things. So they get a false read. And all a false read will do is it's just tricking you. You know, so try to capture it. I know, what Tim was just saying, it's tough to do, especially if you think it's a dry subject, but at the end of the line, it's lining your pockets.
Yep.
And really the language of business is numbers. So, to really get to that end goal of having those dollars to set you up in the lifestyle that you want, the numbers piece of it has to work.
Yep, agreed. All right, great. Well, let's go ahead and wrap it up. We're a little over the 20-minute mark. But Cyndi, if people want to get in touch with you, they can find you, I'm sure, on social media, Cyndi Thomason. That's
right. And the Books Keep has a page too. So Books Keep, or on the web, bookskeep.com. And you're going to get me 5 copies of your book, and I will get those distributed to whoever posts the most embarrassing way that they've lost money in their business. And then Norm and I will peruse through those and pick out some of the best ones. Whoever posted the refund for a product that made a deposit on, that's probably going to be a winner there, because that's a tough one. And I empathize. So we'll get that taken care of this week. If any of you are watching this maybe on YouTube later and you have questions about profitability or knowing your numbers, post in the comment section. And if Norm or I don't know those answers, we will get the questions over to Cyndi and get an answer from her and post back for you. So thank you all for being on. As always, Norm, where should people go to find more of the crazy stuff that we're doing?
Oh, you can head over to privatelabellegion.com or head over to our Facebook or YouTube page, Private Label Legion.
Awesome. Well, thank you again, Norm. Thank you, Cyndi. Thank you all of you for watching, and we'll see you guys next Tuesday.
Thank you, guys.
See you later.